What's up, YouTube? It's Yemi here again from SwingTradeFX. And yes, YouTube community, it's been a minute. And yes, back again with another video. You know, whenever you see the SwingTradeFX notification drop, you know it's about to be a lot to learn. So much to unpack from today's video, because I'm going to be talking about a critical topic, a very important part of Forex that really cut people's profitability capacity in the market. And I want you guys to sit back and just relax. And as you know, always, let's go. All right, so welcome back. Before we start today's class, I really want to talk about something really very important. And I want to talk about scammers in the industries that are that prey on naive and new traders and take their hard-earned money. You know, the purpose of SwingTradeFX is to show you guys the right thing, to expose, you know, things that people are doing that they shouldn't be doing, and just all these fake guys out here. And unfortunately, we are starting to become a victim of those guys, right? And I'm gonna try my best to use every single video going forward right now as a key awareness, right? To let you guys know that I am the only swing trade FX out there. Any other swing trade FX that reach out to you first, you know, just know it's not from me. I'll never text you first. And in the little way I feel I could caution you guys, I'm going to show you guys so much. So if you want to have direct access to me, all you have to do is to go on YouTube, right? Type on SwingTradeFX, right? It's going to bring you directly to my page, right? Click on my profile. I'm the first person that's going to bring out, right? And for you to have direct access to me, all you have to do is to click on this Telegram link, right? There is my Telegram link right there. You can open it up just like this and you click on my Telegram link, right? When you click on this link, the web is gonna take you to a link where you can access my Telegram, okay? And once you open the Telegram, it's gonna bring you right to my direct community, okay? So this is what it's gonna look like, okay? And when you get to my direct community, I'm not gonna text you first, okay? To contact me directly, you're just gonna click on the contact at me, then it takes you directly to us and me and my team, and we're going to answer you. Please don't fall victim to these guys, right? I'm not going to post any link outside of my YouTube. You know, everything is right there pinned on my profile. So if you want to reach me directly, all you have to do is to reach out to me. And I must say that our community is growing, and a lot of people, so much testimonies, right? I drop free trade ideas every time, and most people have been so profitable. We've recorded over 95% profitability from every student that have enrolled in our mentorship. And you know, a few students that enroll in our bootcamp, you know, people really profiting off this. Like you all know, in SwingTradeFX, I do it first and I teach it next, right? I don't teach it first and try to catch up with it, right? That's what separates us from everybody. So, well, let's get back into the video for today. So let's go. All right. So I'm going to unveil the topic we're going to talk about today, which is stop loss in Forex trading. Stop loss in Forex trading. This is a very critical part of Forex trading that everyone needs to understand, right? Everybody needs to understand this, right? But it's so sad that just a lot of people think that they are risk takers because they set stop losses. Now, it's a different game to take risk. Everyone can take risk, but not everyone can accept risk. That is why your knowledge of understanding how stop losses works in forex trading has to be comprehensive. Unfortunately, many people just think because I'm putting up my stop loss, I'm breaking even my trade, that means you have a good knowledge of the stop loss. Even many of these guys that are teaching you about the stop loss do not actually understand the principle upon which stop losses work. And I believe that in the course of this video, you are going to have a deep understanding, and I'm going to be opening your eyes to how to set stop loss in the forex market. So let's get straight into it. Well, Many people had reached out to me that most of their trade ends up prematurely. Many people ask me, how do you get confidence to not break even your trade and watch your trade moves in profit before you break even your trade? I've gotten so many messages, hundreds of messages, right? And I must say that when a lot of people speak about certain things, right, it means that most people are going through difficulties and going through certain challenges in understanding. And to be honest, I know because I can relate with it, right? In the early days of my trading, I was so frustrated because I think setting stop loss is going to protect my account, but it did the opposite for me because it cut out my trade prematurely, and this trade ended up going in my direction, and I'm always frustrated. And just because of that, it leads to different losses because I'm trying to catch a moving trade because the trade hit me up prematurely before it started to move. And I know a lot of you guys can relate to it. And why does this happen? Right? This happens in the forex market because many people have not been taught the principle upon which certain stop loss is based on. If you are in SwingTradeFX, or if you've watched my video, you're going to realize that everything about the forex market, I explain it from a principle point of view, right? From the free content I share on YouTube to the most exclusive content I share with my private student, right? I go into the root of the principle upon which these things work. Understanding it from a place of principle allows you to be able to actually execute it the way it should be executed, right? So I'm going to share like a brief right? And I'm going to give you guys an understanding of this, right? If you want an in-depth, right, teaching, you can enroll in my mentorship course. Just know if you're getting this free content and this deep value for free, just ask yourself what you're going to get if you're my private student and have access to one-on-one mentorship with me. So I recommend my mentorship for anyone who's looking to scale their trading from inconsistency to 5 figures, right? I only raise 5-figure traders, right? And we have multiple proofs for that, right? So let's get into it. Many things and many ways you've been taught in your trading that when you trade, let's say, for example, let's say you're picking a trade off this level, right? Many of you guys, let's say you're picking a trade off this level and your trade starts to move from this level. Many of you guys have been taught to break even directly so that your trade can run risk-free. But when you tap deep into the psychology of that, you're going to realize that it's from a place of fear. It's from that is a form of FOMO, right? That's a form of fear of missing out, right? That the trade might move against you. So, anyways, let me just break even and see how it goes. That's a gambling mentality. And I'm going to tell you this as a professional trader that the moment you find yourself trying to look for break evens when a trade is in the early stage of profitability or early stage of profit, it means that you still have the subconscious of fear. You have this consciousness of fear eating within your subconscious, and it's really from a place of not understanding, not having a full knowledge understanding of what you're doing, right? There's a popular thing I tell my student, right, that the reason why people are afraid is because there's a presence of ignorance, right? If you know exactly what you're doing and you know how to do it excellently, there's not going to be any cause for alarm or fear, right? So this is because most people that have taught you says after a trade start to move in profit, in early profit, you have to break even to render it risk-free. It might sound like, yes, it's a good thing, right? But deep down, if you take it deep to the psychology of that, it comes from a place of fear, comes from a place of uncertainty, comes from a place of gamble. It's a gamble-induced kind of knowledge, right? But when you hear that, you think it's a very good knowledge. But today I'm here to tell you that this is not the right way to trade. You can bet me anywhere and go everywhere and go look for some of the best traders in the industry. They are not always walking by that route. They walk by a separate route, right? And the goal of SwingTradeFX is to expose you to many things you need to know as long as we are here until we get bored and we leave this place, right? So now, for you to understand stop losses, I'm going to start by establishing chart structure, right? I'm not here to speak about chart structure exclusively. I've done a video on chart structure, and if you want to understand that, you're gonna find the link pinned above, right? You can go there, right? But many of you guys are gonna be wondering, What is the correlation between chart structure and setting stop loss? Right, that was what I thought too. And I'm going to show you right here how to set stop loss. Well, let us establish, right? We have two types of chart structure. Am I correct? We have the bullish chart structure, right? And we have the bearish chart structure. So let's establish the right. At SwingTradeFX, we teach, right? We don't narrate. We don't tell people what to do. We teach and we leave them with the choices to do, practice what has been taught. Now, this chart structure right here is what we call the bullish chart structure, right? And this this chart structure right here is what we call the bearish chart structure, right? So usually the market moves, right, in highs and lows, in highs and lows, highs and lows, highs and lows. It moves in a wave pattern, right? People who have gotten the privilege to be in my master class, which I give people free access to my master class if they enroll in my mentorship. Sometimes, when we just want to do that and we just feel like, you're going to realize that I mentioned that the market moves in a push exhaustion cycle. What does it mean? After a push, there has to be an exhaustion right here. A push to the downside, exhaustion back. If push, usually the push are always impulsive, then the exhaustion are always characterized by shorter candlestick, right? Push and exhaustion, right? So because the market moves in waves and swing, right, it makes it very difficult for us to set stop losses just anyhow we want it, or just by the universal way you've been taught to set the stop loss. But then understanding that the market moves in these patterns, right, it gives an open up opportunity to look at this pattern, recognize this pattern, and strategically create a principle around setting a stop loss whenever we're in a trade. And what does that mean? That means that if the market does not move in a straight line and the market is always found of making a push and exhaustion cycle, that means there have got to be a strategic way in which we can set our stop loss in such a way that when the market is making that exhaustion, right? Let's go to a new page real quick. When the market is making a move and the market is making this exhaustion, right? Our stop loss, right? Our stop loss do not get eat out, right? Before the market now continue in the direction of the trend, right? So that means there's a way we have to set our stop loss. So I'm now going to talk about the correlation. I'm going to correlate it and link it all together. Correlation between the chart structure and stop loss setting. Now that you have an understanding that the market moves in waves, the market moves in certain patterns, which is the up exhaustion, up exhaustion. Now we're going to establish that we need to be strategic with the way we set our stop loss in such a way that when we enter into a trade, okay, when we enter into a trade, we allow ourselves to monitor this pattern and allow us to set our stop loss strategically in a way that, number one, we allow the market to breathe. That's number one condition of setting a good stop loss. In such a way that your stop loss allows the market to breathe, number one. Then number two, at the same time, allows you to be able to protect your capital strategically, right? So there's a paradox right here. You want to let the market breathe, at the same time you want to protect your capital. How do you do that? It goes back to having an understanding of the correlation between chart structures in the market. Everything is built around the chart structure. The world of Forex revolves around chart structure. Every single thing you want to do in the market revolves around understanding of chart structure. So I'm going to create a prototype example right now on how to successfully draw or mark out your stop loss area. So let's say you pick the trade off of this point right here, right? You pick a trade off of this point right here, and the market, is making a move like this. How do you successfully manage a trade, right? The honest truth is this: when you pick your stop loss, when you pick your trade, most of you have been conditioned that when the market moves to a certain level, let's say the market has moved to this level, that you have to bring your stop loss and break even and see how the market goes. Stop doing that. This is a gamble mentality. This is a system that create fear to you and make you lose your confidence in trading. First of all, you need to accept the fact that there's a random distribution between wins and losses in the market. And if you find yourself breaking even the moment the market moves, number one, you find yourself choking up the prices, right? You're not giving room for the market to breathe, to make its exhaustion and ascend and moves in your direction, right? So you are actually not allowing the market to really do its job. So that is why many of you guys, when you get into the market, you break even, the market taps you out and you call it whatever you want to call it because of lack of understanding. You call it a market trap, you call it the institutional grab, whatever you guys call it. Hey, listen, it is really not that deep. So now, how do you then now draw your stop loss? It's very simple. Whenever you pick your trade, now let me take this back. Whenever you pick your trade, right? Let's say the market hits this level and all of a sudden you're looking for your trade opportunity and the market starts to move, right? So let's say I'm going to use the green line to indicate your entry. Your entry is right here, right? The first thing that I need you to know is that for you to find an entry right here, there must have to be a trend change that indicates that the market might be going back up. So how do you set your stop loss now? It's very simple. Very, very simple. Allow the market to move up. Then the moment the market retraces, let's say this was the level you pick your stop loss, let your stop loss be below that level. Okay? The moment the market retraces and the market pull back to the upside, what do? Sorry, let me use the green line to indicate an upward push and a red line for the stop loss, just for clarity. So let's say the moment the market moves like this, your stop loss is behind the level where you took your trade, right? Now, the moment the market moves up, don't break even your trade. Allow the market to move, to retrace as much as it wants. But the moment the market moves at this level, okay, and break this previous area of resistance right here. The moment the market breaks this previous area of resistance right here, you know what you're going to do? You're going to move your stop loss now. You're going to move it to break even at your entry point. Notice something. The stop loss is right below the last low that market established by reasons of this new trend, right? Then what is the next thing? You allow the market to keep moving, right? And as the market makes another low, right? What do? It makes another low and it breaks this previous area resistance to confirm a new higher low. What do? It's really very simple. You move your stop loss right here back to this point and you continue in this pattern, right? You continue in this pattern as long as the market continues to retrace and continues to do what? To break. Now, it has to break the last high to confirm that a new low has come into the game, right? What do? You keep moving your stop loss as it ought to be. Now, what have you been able to successfully do right here on this trade? It's very simple. The fact that you move, the fact that the market broke this high. Now listen carefully. The market that the fact that the market upon this high here, the fact that the market broke it, right, establishes and confirms the fact that we have a new low right here. So the moment you put your stop loss right here at this level below this last low, it tells you, right, that you've been able to strategically move your stop loss in such a way that it honors your structure. That's number one. It allows the market to breathe. And at the same time, look at how you've been able to protect your account from secure your trade from this point downward, right? You've probably, if your take profit is probably right here, right? You have been able to secure about 75% of your trade. So you are able to do two things at a time, right? By your understanding of setting the stop loss in this way that I've taught you now, you've been able to, number one, allow the market to breathe, and at the same time, you'll be able to protect your money. So now let's talk about protecting your money. Like I said, first of all, look at it right here. You've been able to look at it right here. You've been able to secure about 75% of your trade, right? If that was the TP, right? This is the first argument, right? You are, can you guys see right now that moving your stop loss behind the lows, right, of the structure in which your new trade starts to move allows you to secure your profit. Now, the second thing that it does, right, which I'm going to prove it out to you, right? You know, I would never give you anything that does not work, right? Is the fact that you allow the market to breathe. What does it mean to allow the market to breathe, right? Let me establish that right here in the next slide, right? So let's say the market is moving like this, right? And your stop loss is somewhere around this point, right? Let me create a case also. Again, let's say the market is moving just in this manner, retracing this manner, and finally break this level, and you move your stop loss from this point to this point, right? It breaks this this eye right here, okay, right, to establish a higher low. So now let us label it real quick. You're gonna see this is a low, right? This is a high, right? This is a higher low. This is a higher high. Now the market made this higher low, right, and make a new higher high right here. Now, what does this mean? Now, remember, what we want to do is to express certain stop loss the right way with respect to the fact that it allows the market to breathe. Now, what does that mean? Allowing the market breathe means that from this point where the market is right now, if the market decides to want to retrace, your stop loss has been put below the last higher low, right? So the market can retrace for all you care, can consolidate at the 61.8 area. In fact, sometimes move a little bit below the 61.8 area and continue in the direction of the market. It's not going to affect your stop loss. That means that you've been able to set your stop loss strategically in such a way that if the market should come to this low, if the market should come to this low and break this low, then you should know for sure that the moment the market, let me erase this. The moment the market consolidates, right, and continue to make the push below this low, right, below this low where you kept your stop loss, and break and close below this low. Now, this is no longer an uptrend. This is no longer an uptrend, right? That means that the market has actually broken and established a new bearish trend, right? And at this time right here, you're going to figure out that the market will have taken out the stop loss. So you took out you've been able to create a system of setting your stop loss in such a way that the only point where your stop loss get hit is if the trend changes. But as long as the trend does not change, right, like this, that means you set yourself up to keep riding the trend up, right? So the moment this new trend, let me delete this real quick. The moment this new trend formed into a new high, right at this level, what happened? Right? You move your stop loss right here to the new low. And this is how you are able to set your stop loss with respect to letting the market, allowing your trade to breathe, and at the same time taking in your profit. So I'm not just going to explain in a on the whiteboard. We're going to go on some live examples of certain trades that we've taken, and every single example I'm going to be giving you are examples that I probably posted on my community. We're so transparent, right? Knowledge does not need you to hide behind any curtains or behind any mask, right? Every single thing we do at SwingTradeFX is 100% with 100% confident, and we make it extremely transparent, right? So let's look up a trade. Let's look at a trade that I took sometimes December last year, right? I took this December / early January. This trade gave me 1:12 risk reward, right? And I was anticipating here that the market is going to reject somewhere around this point, right? I had my confirmations, which I teach many of the strategies to my students. Like I said again, if you're really struggling with forex trading, please just go ahead and go to my mentorship, right? You can contact through the Telegram, and we're going to give you some very good audience, right? We are always available to almost 24 hours to reach out to every of a student, and that, you know, is one of the quality you should look out for when you're looking for a mentor. It doesn't necessarily have to be me, but whoever you're comfortable with, make sure they are very accessible. The purpose of a mentor is to mentor you and teach you and guide you, right? If they're not accessible, how are they able to fulfill that? So now my take profit level, for everyone watching right here that is in my community, you guys can remember that I took this trade. This was a 1:12 risk reward swing trade for me, right? And I took my trade, you know, somewhere around this point. I just want to give you guys a glimpse, right, of, you know, how we do it, right? I took my trade somewhere around this point, and my stop loss was somewhere below this point, right? And as the market start to move, did I really, right? This was supposed to be my TP area, so let me indicate it with a green so that you guys can understand. Now, was I quick to jump into the trade, right, and just take my profit? Sorry, and just break even? No, of course not. So let's go to the 1 hour, which is the time frame where I was able to, you know, execute this trade. I was able to execute it, right, and my entry was somewhere around this area, right, with my stop loss somewhere around this point, right? You can go to my community and, you know, just trace the time, and you're gonna see where I sent the trade out, and, you know, I even talked about the trade. Now look at what the market did, right? Now as the market starts to move, right, am I in a hurry to enter this trade? No. The moment the market made a new higher low right here, what did I do? I broke even my trade. So I move in my stop loss right now. This is when I see it fit to move my stop loss, right? So let me use a different color, which is the green, so that I don't confuse you guys. So the moment the market made the first retracement right here, what did I do? I moved my stop loss right to this point. The moment the market came back right here, I never moved my stop loss. I was super confident in the direction of the market and where the market is going with respect to my analysis and strategy. And I don't want to mess it out with my panic or me focusing on money, right? At this point, my trade was on, you know, my stop loss was in some profit, right? The moment the market make this move, right, just like I explained, and broke this and confirmed this point right here to be the new higher low, what did I do? I moved my stop loss right here, and I moved it below this point. Now, what have I done? I allowed the market to breathe, right? Most of you choke up the market and you don't let it breathe, right? So now, the moment the markets continue to move up, right, the market has gone more than halfway into my TP, right? I do not mind, right? I only move my stop loss the moment the market made a new low, right, and confirm that new low by the break of this point right here, right? The market broke this point right here. It confirmed it right here. What did I just do? I moved my stop loss right here. You can see how I'm systematically and professionally managing my stop loss, right? So this was the last point where my stop loss is, right, before I finally, you know, smash my TP. So at the point where the market smashed my TP, I'd secured about 60% of my profit right here. And it is really that simple, right? And I want you to go into the market and look at many trades you've picked in the past that has eat you out before you start to move your direction. You're going to see that you've been doing it wrong. So you need to be able to have a knowledge of how structures move, right? For you to now be able to apply this principle in setting your stop losses, right? So this is going to be all. I want you guys to apply this literally, and you're going to see so much difference in your trading. However, definitely there are more to this. There are more to this, right? There are in-depth knowledge, right? There are way much in-depth knowledge of many other things that you need to know to effectively set your stop losses, right? This is going to help you, right? However, you need more knowledge on this, and this is definitely for all my students alone. And if you really enjoy the content and you really are struggling with your trading, to be honest, taking the next prop firm is not what you should do. Funding your account next is not what you should do. You should invest in knowledge. You should invest in your education, right? So that you know many things you do not know, right? There are different phases, there are different knowledge to set the stop loss. This is just the basic. This is just what you need to understand. And I know this is going to blow your mind away, right? So you should expect what is more than this, because there are different layers of knowledge, right? If you want to get started with the trading journey, my goal is to create as many five-figure traders as possible, and that is what my mentorship is for. If your goal is to make a living five-figure out of forex trading, you should be in the SwingTradeFX Academy, right? You can contact, you know the way to contact me, right? The link to all my channels, which is my Telegram, is posted, right? It's going to be posted in the description, and it's going to be pinned in the comment section. You know, just click on Telegram link. Don't fall into the hands of scammers, right? I will never text you first. Just go straight to contacted me. You're going to find my team respond to you. Our response is very prompt, and I want you guys to sit back and just practice this in the market and look for many other trade opportunities in the market, right? Many other, they are all there. They are all there, right? We took this trade some time ago as well, and you're going to find that stop loss was somewhere around below this point right here, and you're going to find out that as the market start to move, we begin to adjust our stop loss accordingly onto the market hit our TP, somewhere around this point. And so this is how to do it, right? There is no way your trade will always eat you out before you hit TP if you are able to use the knowledge of chart structure to setting your stop loss. And I believe many of you guys have learned a lot, and I want to wish you guys a wonderful ride in your trading journey. I want to motivate you guys that many of us that you see as a pro today started as a novice, right? We took time, we dedicated time in investing into knowledge, though it cost us a lot of money before. We paid a huge price for ignorance, but these days, look for someone that you trust so much. It doesn't necessarily have to be us, right? Look for someone you trust, you love their strategy, it fits into your personality, right? I want you to assess them through their accessibilities, what they teach, the content of what they teach, and how reliable are they. Do they trade live? Do they send live? Do they do their live analysis? Does their live analysis turn out the way they want it to be? What is their success rate, right? Is it 90%? Is it 50, 40%? You make your assessment and find someone to walk you through this journey, right? Because this could be a very frustrating journey if you do not have the knowledge, and it could be the easiest journey if you have someone to lead you through. So thank you guys so much, and watch out for the next video, guys. And our bootcamp is going to be coming out very soon. The date is yet to be announced, and watch out, and God bless all of you guys.